on this. We are joined by Stan Shamu from IG in Melbourne. Stan, yeah, mayhem really in the FX space thanks to the Fed. What were the highlights? Just take us through the main movers.
Yeah, absolutely. Of course, the dollar index was the first cab of the rank. It was trading around 80.50 before the Fed announcement, and prior to or post the Fed announcement, we actually spiked to around 81.50. So that was up a full dollar. So it really did look like markets were fairly positioned for a cautious tone by the Fed. But of course, with Ben Bernanke coming out quite decisive, and of course saying they're likely to start winding back on asset purchases later this year, and they're likely to end middle of next year. That really did send some shockwaves through the market. Now, the biggest beneficiary, I suppose, will be Japan. Of course, we saw the dollar-yen spike to about 97. Japanese officials will definitely be appeased by this, as the recent appreciation of the yen against the greenback had started becoming a problem, and was causing quite a bit of volatility in Japanese equities. Of course, the pairs pulled back a little bit below that 97 level, but the US dollar looks like it's in good stead at the moment, and we should continue to see it well supported. Possibly the dollar index could start drifting or edging back towards those highs in the 84 region. That's probably what the market will be looking out for now. But the biggest losers out of all this were the risk currencies, particularly the Aussie dollar, which dropped to its lowest level since September 2010. Of course, we dropped to around that 92.6 level, and it looks like a lot of traders will now be targeting that psychological level in the 90 region. Of course, there were a lot of traders who were looking for shorts out of the Aussie dollar, but the drop was probably a little bit more drastic than anyone thought. We might see a little bit of a bounce in the short term, but of course, any bounces off this level will probably be used as another opportunity to sell. Just looking at the region today, we've got China PMI, and that will probably be something that traders will look out for when it comes to the Aussie dollar. Nothing but a positive or better than expected print will do today. Of course, there has been a massive loss of confidence already from the China perspective. So should this HSBC flash manufacturing PMI reading not come in above that 49.4 level, which is where the markets are expecting it, then we could see a renewed sell-off in Asia and for the rest of the region today. Even the single currency, that's the euro, that's been holding quite well around that 134 mark, and it dropped as well below 133. So it's really been across the board selling for a market that had been quite stimulus dependent for a while. And of course, this is the trend we're likely to see in the short term and heading into the end of the week.
Just in terms then of your opening calls for the ASX 200?
Yeah, we're looking at a drop of about 0.9% to that 48.15 level. Of course, yesterday we had a fairly solid day with some skeptics out there starting to feel that maybe people were a little bit too positioned for winding back, and that proved to not be the case. So we're giving back all those gains from yesterday, and potentially we'll continue to see the local market drift lower in the session today, especially if China's data doesn't come in better than expected. Then the sell-off is likely to accelerate later in the session. Of course, the miners will likely be the biggest culprits of this, and we're already expecting a pretty weak start for the likes of BHP, which is likely to drop nearly 1%. Just over to the gold space, it's going to be another tough day. Of course, the precious metal was down to 1,350. That renewed US dollar strength on the back of the tapering off has really hurt the precious metal. The fundamentals continue to look significantly weak. We'll probably see gold test that 1,322 level in the short term, which is the recent low. And of course, the gold miners today will likely come under pressure, particularly Newcrest, which continues to be dogged by its issues with ASIC and disclosure. So that's going to be another tough day for them, along with the rest of the gold names. Apart from that, there's not too many stock-specific stories, but it will be all about the market sort of trying to regroup and trying to see what life will be like without quantitative easing, and of course trying to adjust to the fact that we can't always be dependent on stimulus going forward. So the risk space will really have a challenging next couple of days.
Stan, as always, thank you so much for that.
Cheers, Brady.
Time for a check on some of the stories in the business pages today. The Financial Review revealing Toyota Australia was brushed off by union opposition when it complained about high labour costs and sagging productivity at an emergency summit of car industry